Imagine two traders sitting down at the exact same time, looking at the same asset. One is sweating, the other is perfectly calm. They are staring at identical candlestick patterns. Their indicators are flashing the exact same signals at the precise same moment. A minor price dip happens. The first trader panics, assumes a crash is coming, and sells for a quick loss. The second trader waits patiently, lets the strategy play out, and quietly secures a profit. If the data was exactly the same, and the system was exactly the same, why did they walk away with completely different results? Success in this environment depends less on the math on the screen and more on the psychological state of the person clicking the mouse. There is a common assumption that if you just read enough financial news or draw enough lines on a chart, you can finally foresee where the price is headed. The reality is much less comforting. The market answers to no one, and a single unexpected government announcement or news headline can instantly wipe out even the most meticulous technical analysis. Because we want to believe we can achieve certainty, we start attaching our ego to our predictions. Every trade becomes a test of our personal intelligence and self-worth. When a price drop shatters that illusion, it triggers a primal biological response. Fear takes over to protect money, or greed chases a missed opportunity. The moment those survival instincts activate, you are no longer analyzing the market. You are fighting a losing battle against your own mind. To actually succeed, you have to adopt a completely counterintuitive idea. You do not need to know what will happen next to make money. Think about a casino. A blackjack dealer has absolutely no idea if the very next hand they deal will be a win or a loss. They don't panic when a player hits 21, because the casino operates on a strict mathematical house edge. A professional trader treats their portfolio the exact same way. Instead of acting like a gambler trying to guess the next card, they act like the house, trusting the mathematics of their system. Moving away from the need for perfect certainty and accepting the mechanics of probability is the primary pathway to long-term profitability. An edge in the market is never a guarantee. It is simply a slightly higher probability that one thing will happen over another. This grid represents 100 trades, demonstrating an edge through random distribution. We fill the grid with 60 green squares for winning trades and 40 red for losses. But look closely here. You will naturally find clusters of red grouped together. Even with a highly successful 60% win rate, you can hit 4 consecutive losses entirely by chance. It doesn't mean your system is broken. Accepting this distribution provides a logical framework that helps steady a trader's emotional response. When you expect those red clusters, you stop panicking. You stop tweaking your strategy after every setback, and you stop taking a localized loss as a personal insult. By viewing every trade as an independent event that contributes to a larger dataset, the cycle of fear and greed starts to lose its grip. This brings us to the ultimate psychological destination for anyone interacting with the markets, a state of mind known as the zone. Achieving this requires moving beyond indicators and algorithms to find a mental environment of absolute emotional neutrality. Inside the zone, the trader drops the immediate desire to win. Their focus narrows down to the execution of their predefined process, trade after trade. In this state, a financial loss begins to look like a routine business expense, while a win is simply the math playing out as expected. Look at this visual contrast. On the left, we see the chaos of a volatile chart, but on the right, the water calmly reflects whatever is placed above it. The market is just like that water. The market itself has no intent and cannot cause you emotional pain. It merely reflects your own internal lack of discipline and your deep-seated fears. The real work is to stop attempting to predict an inherently unpredictable environment. Your true goal is to build a robust statistical system, accept the randomness of the moment, and execute your rules without a second of hesitation. Ultimately, the victory in trading comes when you surrender the illusion that you can control the market and take total control of your own mind.